Let's find some day trades and swing trades. Hello, traders. It is Thursday, July 30th. We're about 2.5 hours into trading. We had a market drop this morning. We took out the low from Tuesday, and the market was able to find support on these two long candles with tails under body. That was a pretty good sign. Higher low, bullish 10p cross. Market started to rebound. Took a little bit of time to get into the gap, but about 20 minutes ago, I had mentioned to members in the chat room, I said, look, we're in the gap, tiny little candled bodies here. That is a sign of resistance. We've got a bearish 10p cross right here. Take profits. I said, I wouldn't really try any shorts right here. My suspicion is that with major tech earnings ahead of us, that we're going to see a pretty decent market bid today. So you should expect that any little dip here, you get the pullback in the 10p indicator, bullish cross, that is your chance to reload. Ideally, this horizontal support level now was resistance, now support holds, but we'll see. Let's zoom out very quickly and get the context for the overall market. Well, the context, as you know from my recent videos, is that the market is not going anywhere. We have been sideways, very low volume trading environment. Yes, we have earnings season. Everyone was hoping that earnings would be the catalyst to push the market higher. Last week we saw Microsoft, Tesla, Netflix, Intel all trade lower after the number. Good news is priced in for tech stocks. I've also been mentioning that out of the S&P 500, there are 10 stocks that are up 35% on average since the beginning of the year. The other 490 stocks are down on average 10% since the start of the year. The point to all of this is that the rally has been very narrowly defined. That is not a strong market. We've got Amazon, Apple, Google, Facebook. Those are all included in that list of 10 stocks. They report after the close today. That is going to drive the market. I think the results are going to be pretty good, but are they going to be good enough? In almost every case, these companies have benefited from the coronavirus. That's why they have been leading the market rally. The other 490 companies, unfortunately, account for the vast, vast majority of employment. And if those companies are struggling, we could start to see that take a toll on the employment numbers. We have the PPP is currently running out, so we've got politicians trying to get a new deal together. They're haggling. They're starting to bicker, but don't be worried. They're going to get a deal done. It'll be at the final hour, just before they're ready to leave for recess. And then the market will be waiting and wondering what's next. The rioting will be continuing. The virus will continue to spread. This could be the last tranche of stimulus that we see. And investors will get nervous. Typically, sellers don't like to sell ahead of these mega cap tech earnings because there's a lot of optimism and a lot of good news that comes with those tech earnings. But the air will get a lot out of the balloon next week, and that's when we could see some profit taking. So let's say that everything comes up roses today. Everybody beats, market gangbuster rally, go, go, go. I think that next week could be a little bit more problematic because those economic data points, to me, are more important. By the way, we saw that Q1 GDP dropped about 35%. Excuse me, that was the advanced number for Q2 GDP. GDP dropped about 35% roughly. That's backward looking. We knew it was bad. We knew it was going to be really bad. I'm more interested in where do we go from here? What are the current economic data points that tell us how quickly this recovery is taking place? And we'll have ISM manufacturing and ISM services next week. Those are both surveys, so they tend to be forward looking. We have ADP on Wednesday. We've got the unemployment report on Friday. We're starting to see initial jobless claims creep higher. They were at 1.43 million this week. They were at 1.41 last week. So they are ticking higher and higher. I suspect that companies are realizing that the PPP is running out, that they're going to have to lay off employees. This is a way for the government to get people back on the job. So over the course of May and June, that jobs rebound was exaggerated, in my opinion. It was a sugar high. It was artificial. There was no substance to it. We're not really seeing the pent up demand that would fuel this economic recovery. And if people are not spending money, it's going to take the recovery even longer. We could have potential credit problems down the line as well. The moratorium, the eviction moratorium, also is set to expire. There could be 23 million people who are evicted from their apartments in October. That's a lot of people. So, if you look across all the industry groups, you look at hotels, how many people they employ there, travel and entertainment, huge numbers. Casinos, hotels, restaurants, theme parks, Disney, huge industrial firms like 3M announced earnings this week. Lots of bad news on that front. You've got financial stocks taking a lot of big write downs. The bottom line is, as I look across all the different sectors, yes, tech has been strong. Yes, healthcare has been strong, but almost all the other sectors have been weak. There are some consumer discretionary stocks who have benefited from all of this as well, but the vast majority of the companies that employ the workforce, those are the ones that are really struggling. And with states currently retreating to phase three, and some major cities even considering going back to stay at home, this is going to make the recovery much, much harder. So I don't like the setup right now. I think that we're setting up for a possible market correction in here of 10%. Could be a little bit more. All depends on if credit concerns start to surface. That is the really big question. Now, the Fed, they're going to do everything imaginable to keep the market afloat, aside from buying equities. Yesterday, Jerome Powell said, we are not considering buying equities. So they have been buying some bonds, some corporate bonds, but they are not going to be buying equities. But apart from that, he said lots and lots of uncertainty right now. And the Fed is as accommodative as you could ever imagine. So that's not going to change. There was a decent reaction to it yesterday. Stocks rallied a little bit on the news, the FOMC statement, but we've thrown the kitchen sink at the problem. We threw $6 trillion at the problem back in May, and the hope was that this would be a V bottom recovery and that the virus would decelerate. The spread of the virus would decelerate during the summer, quote unquote, it would go away. It hasn't. It's been very pervasive and it's continuing to spread. So, not a good setup for the market right now. That's why I think that if you're a swing trader who cannot watch the market intraday, you need to be in cash. You don't want to be out there buying puts. Why? Because we're in a 10-year bull market run. We're in a 5-month bull market run. You don't want to be picking tops. That's a great way to lose a lot of money. I want to sit in cash because when the selling does come, I want to see how strong it is. I want to see how uh, strong that selling pressure is, how aggressive that profit taking becomes. And I also want to see how strong the bid is. How anxious are people to scoop that dip? When I have those pieces of the puzzle, I'll know if that decline has more legs to it or if it's a buying opportunity. I don't have that information until I start seeing some of that selling. For those of you who are gnawing at the bit to buy puts, you've got to see those technical breakdowns in the S&P 500. I've shown you a couple of levels that you can use. If I draw an alert line, I just connect this bottom with this bottom right here. You can see that would be the first technical breach that has to happen. The next one would probably be at, 319.50, I think, is a support level that I like. 312 is another support level. Then you go down to 306, which is the 200-day moving average. So if these support levels start to fail, then I think you can consider some shorts. On the short side, though, the declines have been very, very fast and furious. Once the programs start triggering, they feed off of each other. And so the move may only last a few days with some gigantic snapback rallies in there. That's why I suggest to swing traders, don't try to short this market. Just see what happens, see how things play out, see how far we fall, and know that your best trade is going to come once support is established to go back in and reload on some of these really, really strong tech companies. That's how you need to play it. That means that you should be taking time off right now in August. Enjoy your time with your family and your kids before they go back to school. Don't worry about the market. When you come back, there could be an excellent buying opportunity for you. If you're a shorter term trader, a day trader, or a very active trader who watches the market and swing trades overnight positions, then I think that there's going to be a really good opportunity for you to short the market once these technical support levels are breached. So if the news comes out good tonight, tech stocks, rah, 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 market rallies. Yes, I'm going to miss some upside, but I don't care because I feel that once the economic data points start coming out next week, then I think we're going to start to see some pretty soft price action. August also tends to be a pretty weak month for the market. So let's take a look, see if we can find some stocks. I'm going to use a fairly balanced approach. I'm going to go into the 5-minute chart so we can keep that running in the background. I always want to know what the market is doing. So here you go. A few minutes ago, I said, hey, look at this. It looks like the market's going to roll over and we'll get a dip, and that'll be an excellent opportunity to reload. Now, compressed and then boom, higher. I also mentioned to you, though, that I felt that this was going to continue to fill and that this would be a bullish trend day and we'd continue higher, so that dip would be a buying opportunity. Now it only confirms how strong that bid is. We're going to continue to grind higher, probably fill in this gap, and then everybody will wait for the tech earnings after the close today. It's going to be a very busy day tomorrow. So let's take a look, see what we've got cooking, see if I can find a decent short in here and find a couple of longs for you, because I think the market's going to be heading higher and I think you should focus on day trading. I'm going to be focused on the long side. AMD, Advanced Micro Devices, big gap up on earnings, been able to grind higher today. I would draw a downward sloping trend line on this. We're seeing a little bit of relative weakness. What do you mean? Well, there we've got a nice market pop and the stock did not respond. It's continuing to pull in. So as long as it continues to do that, you do not want to buy this one. You can set an alert here, click on that, click on that. Now I've got my downward sloping trend line. As soon as the stock regains its footing, it'll break that downward sloping trend line. If the market looks poised to go higher, then you can buy it. That is how we do it. So continue to look down the list. PayPal is one that I like. You can see how it hasn't done much from the open today, but the daily chart actually looks good. I like this. I like this breakout right here after earnings. So you've got a horizontal breakout. This was after the close yesterday. They reported earnings. You can see how the stock has been able to rally to a new all-time high. Here we had a bid check right there, support, come back, higher support, higher low, upward sloping trend line preserved. You can use that, draw that in. That would be your stop if you were to buy PayPal for a swing trade. And as the stock moves higher, that upward sloping trend line will move higher. Eventually, when the stock triggers and falls below it, then you stop out of the trade. Until then, you continue to ride it higher. So I would like to see better price action from PayPal today. BLNK is one that I traded today. Really big price action. Look at this. I mean, I don't know. I don't know a lot about that company, but I do know when a stock wants to go higher. This stock looks like it wants to go higher, but I would not hold it overnight. I don't know that the fundamentals justify the current price, and I don't care. If I'm very short term, I'm just going to ride the momentum. So I think BLNK looks good for a day trade today. JMIA, I showed you yesterday. That stock looks really good. You can see how it just blew through the high of the day. Take a look at that daily chart. You can see how it's starting to really scream. Big, big volume. So let's see what else we can find here. PCG, that's a bottom fisher trying to get through this horizontal resistance level. Look pretty good today. Double click on that. If it can get above that, it's got a chance to get to the 100-day moving average. So that looks pretty good. PRPL I highlighted a couple of days ago. You can see how this nice breakout of this compression was excellent. You've got long green candles closing on their high. This stock's got some nice momentum. PRPL. Volatile. Look at that. Big drop, big rebound. So expect some volatility in this one. LVS got my attention earlier this morning. Hasn't been able to get through the high of the day, suggesting that there's some selling pressure, but got a double bottom right there, nice support level right there. It's got to get through the 100-day moving average. Then I think it's got some room to run. So I'm going to click GTC, going to double click on that candle right there. Now I'll know if LVS gets through that high. Continuing to look, going to go into relative strength 30, see what we've got there. Apple rallying ahead of the number. By the way, I tend not to want to trade stocks that are going to be announcing earnings after the close or before the open, because this is the last chance that investors have to square their position. So some people will want to lighten the load, they'll be selling stock. Other people want to add to their position, they'll be buying it. So the stocks tend to be very, very choppy. I tend not to trade stocks that are going to be announcing after the close. By the way, some of you love to trade earnings. That's not what I personally do, but I have research tools for those members who do like to trade earnings. If I click on pre-earnings options, you can see this table here. Now these are all sorted according to option liquidity. So you can see the most liquid stocks with the most liquid options are listed at the top. And if I go down the list, I'll see Apple. Well, let's take a look at Apple. You can see that the dollar net change today is posted. The expected move is somewhere around 6.5%. The average move is around 3.5%. The number of times that that expected move has been exceeded over the course of the last 12 quarters or the last 3 years is only 6% of the time. So you can see that the stock tends to stay inside of that range. Well, how do I use that information? If you're an option trader, you would want to sell a straddle or sell a strangle on the notion that the stock tends to stay in that range most of the time. Now, this is pure statistics. What it doesn't factor in is that Apple has been in pretty much a parabolic move the last 3 months. So you can use this and you can gauge, for instance, NOK, Nokia, that has an expected move of 8.29%. 6.76 is the average move, but you can see that it's exceeded that range 33% of the time. So if you can find something like PINS that tends to exceed, that 60% of the time it has exceeded the expected move, then you might have an opportunity to buy a straddle or a strangle. Usually you're going to want to do that though with options that are trading at maybe a 35 to 40 implied volatility, which we actually have that figure right here. So if you like to trade earnings announcements, this is a fantastic resource that you can use in Option Stalker. We've got all these data points. So I'm going to go back to the chart. We're going to continue to take a look. Relative strength 30, Goldman Sachs is on the list. I do not like Goldman Sachs. In fact, I think that is more of a short than a long. We'll go into bull run, see what else we've got cooking in here. INO up $1.65. Pretty weak daily chart there. Just going to continue to go down and see what we've got until I find something that I like. Haven't seen anything I really like so far. TGT, that could be a good one. Yes, target trying to poke through this horizontal resistance level right here. So click GTC, double click on that bar right there, get my horizontal alert line. When I come in tomorrow or a week from now or a month from now, when target's finally gotten through this critical price point, I'm going to know about it. I won't have to go looking for that opportunity. It will be delivered to me on a silver platter. FTCH looks really good. Love this breakout here. Getting a little parabolic, so I would not want to be swing trading this one overnight, but intraday, I'll bet it looks good. Yes, it certainly does. So that's another one. FTCH looks good for day trading today. So I like it. I think that one works. Take another look, see what else we've got going here. Nah, Pepsi's not really moving much. Budweiser trying to get through this horizontal resistance level, but not able to get through the high of the day. So I didn't see anything there that really struck my fancy. But I do like PayPal on a swing basis. I think that one works pretty well. AMD actually looked pretty good. Qualcomm has been super strong. They settled a lawsuit with Huawei, and that was also part of the news. Qualcomm is another one that I would suggest being long today. You might even be able to hold it overnight. Qualcomm's a tech company, though, with big tech companies announcing after the close, you are taking a bit of a risk. So let's see if we can find any shorts in here. Giving you some longs to take a look at. Let's see what we've got on the short side. And I'm going to go into heavy selling, see what we've got there. 3M, I think, is a really nice short. How would I trade that? You've got this nice little trend line that we can draw right there. And on a violation, which we might get right away, you'll see the pop-up come up. VLO, I didn't go into the daily chart on MMM, so let's do that. And there you can see, before I'd really want to short it, I'd like to see it break below this horizontal support level. You can see how I've already dropped an alert line there, right at that 100-day moving average. If it can eclipse this, then I think I've got a really good shorting opportunity on it, probably at the 148 level. And then it's got plenty of room to run down. VLO, seeing some energy stocks on the list. Earnings before the open. You can see that the stock has been a laggard. It's got this heavy round of selling here, tried to get above the 100-day moving average. Now it is below the 100-day moving average. I think VLO sets up well for a short, and see what it's done on a daily basis. Sold off, got a little bit of a bounce. If we get some selling in the market today into the close, which I'm not expecting, got my upward sloping trend line. When it violates that, I'm going to know about it. We've got what I call a bullish divergence currently taking place in the S&P 500, SPY. That's what an alert looks like. AMD has breached above the trend line. MMM has breached below the trend line. That's how easy it is. And now you click that and it goes right to the chart so you can take a look at it. Back to this bullish divergence, you can see how the 10P indicator has really been falling hard in here. And you can see how the market is holding the bid. In fact, it's holding half of that long green candle right there. That tells me that the market is staging for its next leg higher. We'll keep an eye on it. Keep taking a look at a couple of shorts in here. CVX. So we're seeing a theme here, and that is that energy stocks have been pretty dang weak, and CVX would have to get below that 100-day moving average in order for me to want to short it. Continue to take a quick look down here, see what else we've got. ABBV, GILD. GILD pretty weak, upward sloping trend line breached, 100-day moving average breached, earnings after the close today. So you can't touch that one. That's what that A means. A means after the close, B means before the open, and E means that earnings are going to be announced soon. Intel has been super weak. We looked at that yesterday. GE. GE looks particularly weak. We're below this horizontal support level right there. We're below the 100-day moving average. Had earnings before the open yesterday. GE is a good short. I think that's a really good short. It's a cheap stock as well. So I think VLO looks pretty good on the short side. I think GE looks good on the short side. I like FTCH on the long side. I like Qualcomm on the long side. I'd also mentioned Blink, BLNK. I think that one is able to put in a pretty decent day today. That's all I've got for you. I'm going to be taking some time off tomorrow. Probably going to be a pretty good trading day. I won't be posting my video. If you have an opportunity to take some time off right now, we're going to have a little bit of a busy session. We still got a lot of earnings to get through. Today's going to be gangbuster after the close, so we should see a pretty decent amount of trading tomorrow. However the news comes out tonight, that's what's going to weigh on the market tomorrow. I think tech stocks are going to put some pretty decent numbers together. Everybody's going to be pleasantly surprised with where those numbers come in, but realize that the coronavirus in these cases has actually helped some of their earnings. But they're priced for excellent news. Are they overpriced? Could we see a little bit of profit taking? That would be a sign that some of that air is getting let out of the balloon. So the market doesn't have to fall apart tonight and tomorrow for me to say, yes, I was right. This is what's happening. I think that everything will be pretty stable. You'll have some mixed reactions, some up, some down. But I think the key is going to happen next week. And when we start seeing the initial jobless claims tick higher, depending on what we see from ADP, what we see in the unemployment report, the ISM numbers, those will start confirming that this recovery is taking much longer than expected. If we start getting into the second week of August, and politicians are still haggling over what kind of stimulus bill they're going to pass before they go into recess, that's when I think the weakness really starts to gel and take hold. You're going to see people who are wanting to take profits that have been holding off for mega cap tech earnings. Now those are behind them. They'll be a little bit more aggressive with selling. So I think that this could take another week, maybe two, and then we start seeing the market soften up a bit. That's how I'm viewing it. So if you have time to take off, we're going to a news vacuum in about another 10 days when there won't be anything happening. Really low probability trading environment. Take a little time off, recharge your battery, and get ready for a super busy fall. We've got lots of news taking place. I think we're going to have a ton of market movement and a lot of activity. So thanks so much for watching. If you like the content, please give it a thumbs up and make sure to turn on your notifications. Subscribe to the YouTube channel. We will see you Monday morning, possibly Sunday night. I might do a market recap, maybe try and find a trade for next week. Thank you. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.